Thank you, Bob. I see some familiar faces out here that I get to see once a year, and I know we've moved this around every year. We're not trying to lose you, but we do try to find a good place to fit us all in and be comfortable. So I do appreciate you all coming to hear more about your credit union. This is important to you. One of the things that you saw from the financial results in the slides I showed earlier and the audit results, very positive results in this organization. We continue to post strong numbers financially, strong membership numbers, great member satisfaction numbers. These are all really good results that we continue to do. And we're doing it during a time which is really a tough economic time for anyone in the financial services industry. I've been in credit unions for 20 years, and I could never have imagined there being 3.5% mortgages. It's for a 30-year mortgage. It's just a number that you just couldn't get your arms around. And I have a harder time imagining someone with a 3.5% mortgage coming in and talking to my staff about a refinance. That's even harder to get your arms around. But that's what's happening today. That's the environment we're in with extremely low long-term rates. And it makes it really tough to make an organization like ours or any financial institution work when you have really low long-term rates. It allows us to do very little on the CD side for long-term rates. You saw from the slides, members are jumping out of CDs, they're going into short-term money, and they're hanging out there till some type of long-term return comes along. And we're all there waiting for you to see when we can get that to happen as well. Because trust me, we want to pay more for our deposits. We have nothing on the earnings side to balance it off today, in today's world. So we're watching Washington, seeing what they're going to do. What's this economy going to do? What's unemployment going to do? And things are at least trending upward. We're not in the downward slide, but we're all watching it very closely to see how that's going to move and change our world. And you saw the slide on fee income. That's a really important slide to us, and I'd love to just make that my backdrop on my screensaver because it's that important. It shows that while other institutions have gone on saying, hey, we know the margin's a problem and a challenge, we need to make it up on the fee income side. We haven't raised a fee, we haven't added a fee, so we've not gone that approach to say we're going to go get it through fees. That's not to us a good way to run a credit union and a good way to sustain this organization. So hopefully you can see that our strategies really show through in those numbers. We've got a couple of really key strategies that we keep talking about. We want our rates to be at the top of the market. We want to have some of the best loan rates and some of the best deposit rates out there. We want to have our fees to be the lowest in the market. That's not the way we plan on making our money, is through taking fees from our members. We're going to take the ones that we need to take, but we're not going to go out and try and grow fee income crazy. And we want to try and maintain our capital net worth in that 9% range. We think that's a good number for us. You saw some of our risk profile on where our loan portfolio tends to run. 9%, right around that ballpark for net worth, is a good safety cushion for us to have in the current environment, we feel. And we're there. We've been trying to get there for years. It's great to say we're there now, and now we're going to try and maintain that number. And the last strategy is really to take reasonable risks that really benefit the member ultimately. We're not going to take flyer risks on any type of investment. We're not going to go crazy into any type of a loan structure. We're going to take risks that we understand, risks that we know, risks that really ultimately benefit the member in the long run. During this meeting, we spend a lot of our time really reflecting on last year, on 2012. It really is an annual meeting to talk about the year 2012. I like to thread in just a little bit of what's going on today and what's on our mind for the future. So a couple of those things that we've got around the corner for you. A new rewards program. We've been in the works for almost a year on trying to build a new rewards program. We're right in the mode right now doing some testing and some finalizing of it. So you'll be hearing about that program in a lot more detail in the next couple of months. So we're really excited about what that program can do in providing more benefits to the members. New functionality on both mobile devices, which we call small browser devices. We want you to be able to do a little more self-serve on those small browser devices. We also want you to be able to do more things in your big browser, or when you're at home on your PC at home in the big browser world. So we're going to have some more enhancements on the electronic side as well. Believe it or not, we will be back on Northwestern Avenue. We need a building first, but we're going to be back on Northwestern Avenue. When we sold that building to Purdue or to PRF years ago, we originally would be in, on the original time frame, would be in that building at this point in time. And if you've driven up down that street, you realize there's no building yet for us to be in. But as soon as Purdue gives us access, we're going to get ourselves back in that building. We can't wait to get back on Northwestern. So we apologize for those of you that was your place to go. We're coming back. It just took us much longer than we wanted and is out of our control. We're also updating Union Street. That branch at Union Street, right around 14th and Salem and Union, it's about 20 years old. So we need to do some freshening and some updating, and we're going to do some great things to kind of change that branch around a little bit and get that back up to date. So we're looking forward to that. And we've had some expansion up in LaPorte. We have 2 branches now in LaPorte County, and we're looking to continue to expand in that area. Anywhere where Purdue is relevant, and Purdue North Central right there being in LaPorte County, it makes sense for us to continue to look at those markets for growth. As you grow in a given market, like in our Tippecanoe market, when we become one of the top lenders in the area, top deposit share, market share organizations as well, it's tough to get additional growth in these markets. So we need to look to other markets to expand. So that's an area that we are looking to do additional expansions in LaPorte as well. And we have really great opportunities for our commercial customers. We want to make sure we continue to have real competitive products for both our business loan customers and their deposit needs as well. So those are some areas that we're definitely looking forward to growing and expanding in the future. And the last thing I want to do is recognize a few people as well that haven't already been recognized. Our volunteer committee members, some of the committees have been discussed here a little bit. These individuals that also volunteer their time to serve on committees really make the board function as well as they do. Our board could not be as effective as they are without having a good, strong, capable committee structure. So appreciate all those volunteer committee members that we have as well. Thanks everyone for coming tonight, and appreciate you being here.